Yes, yes, yes. Now that is what I'm talking about. What a fantastic day today. What a fun day to trade. Hope you guys had some fun out there today. Hope you made some money today. A fantastic example, great example tonight of planning our trades and trading our plan. So well done on that. I know a lot of you guys made money today, so well done on that. But now let's get back focused again. One of the hardest things about trading is putting together a string of really successful days. So let's refocus, stay disciplined, and let's finish off this week with a bang. We got a big day coming tomorrow. It is Thursday evening. We got Friday coming tomorrow. And I'll tell you right now, it feels like the squeeze might be on right now. If you've been watching the videos so far this week, you know we've been anticipating this turn, and we might be walking right into a short squeeze here for tomorrow. We have a lot to cover in what might be the most important video of the week here for us. I'm going to go over all my favorite trades in the video here tonight that we have a game plan to make some moolah on Friday. Before we jump in and talk about my favorite trades for tomorrow, make sure you subscribe to our channel that we don't miss tomorrow night's video upload. And if you enjoy this stuff tonight, hit that like button. Give me a shout out down in the comment section. Thank you so much for tuning in, supporting the YouTube channel. But enough of the intro, right? Let's get ready for Friday. Boy, Friday could be another really great day tomorrow morning. Now, where are the best money-making opportunities here? How can we capitalize on what might be a short squeeze coming here for tomorrow? Well, as you can see, everything is pretty bullish right now, right? S&P's bullish and Nasdaq is bullish. But do you notice the difference between these two markets? The Nasdaq looks really, really strong right now, right? S&P, not as much, right? The S&P is going to kick back in a bit of a lazy bull trend. The difference between these two, right? They're both bullish, but this small difference actually makes a very big deal for how we're going to trade this tomorrow. There are 3 different scenarios we're going to go over tonight. If you nail these 3 scenarios, learn these 3 scenarios ahead of a short squeeze, I'll tell you right now, trading gets a lot easier. It'll be another fun, successful day, no matter which one of these markets you're trading. So we're going to cover those 3 important scenarios here on the video tonight. It could be a masterclass for you guys trading short squeezes on the video. Now, before we jump in and talk about these trades for tomorrow, let's all get on the same page for tomorrow, because tomorrow's a Friday. There are 2 things you want to be aware of for tomorrow. First of all is that PMI number tomorrow at 9:45 Eastern Time. This is the only news that we know of tomorrow, right? Who knows? Anything's expected these days in this crazy world, but I would definitely be aware that will probably be the biggest catalyst that we know of tomorrow. You want to be paying attention, especially probably that 9:45 to 11 o'clock block tomorrow morning on any one of these markets. The second thing you want to be aware of is the mindset of a Friday morning. Fridays are a bit of a different animal, all right? So my mindset on Friday, well, let's back up. Fridays, they get low volume over lunch. They get illiquid in the afternoons, okay? So my mindset is I want to get into trades early on a Friday morning and try to leave a position open into lunch, into the afternoon, because if you've watched these videos the last few months, if you trade Fridays, you know they love to run. Not every Friday, but I'll tell you, you can catch some big runners on Friday afternoons that will make your entire week, your entire month. So my mindset on Friday is, and again, very important this Friday because we've had a great week so far. Let's be disciplined. Let's be focused. Let's be patient. Try to get into something early in the morning, right? Early in the session, and then leave a little piece of it because, right, we might get lucky tomorrow and get one of those nice big runners we've seen so consistently over the past few months, right? So 9:45 news is the catalyst. And remember, early in, try to leave those runners, right? See if you capitalize on those big moves. That's what's on my mind here for tomorrow. Now, back to our charts because, after all, the money is made on the charts. And speaking of which, if you like making money, make sure you watch the entire video here tonight because I'm going to cover the Emini and the SPY, the Nasdaq and the QQQs, and everything I talk about tonight can be applied to your favorite market. Let's grab a look at the Emini. and the SPY. First, we'll wrap tonight up on the NASDAQ and the QQQs. Couple things. First of all, these are tick charts. Be aware, if you're watching for the first time tonight, all of these charts are tick charts. You can see the exact time frame up there in the upper left-hand corner. And this is the 21 EMA. If you are taking my free trading course right now, you know how much we love the 21 EMA. It's one of the easiest ways to find consistent winning trades in the market. That's 21 EMA, that little yellow line on there. Now, where are the best trades in the S&P? And most importantly, what are the big factors that are affecting the S&P right now? To do that, to answer that question, let's go out and take a look at the 60-minute chart, right? We've talked a lot about this higher time frame this week, and if you've been following along this week, we know I like to use the 60-minute chart for direction, for levels of support and resistance. Now, the most important thing we know right now on the E-mini, this is also very similar to NASDAQ, we have a very strong run into end of last week. And as we said repeatedly this week, anytime we see a strong move up like this, we expect a deep pullback to attract more buyers in and a retest of that high. So we know pretty much right now, we know where these buyers want to go, right? They want to go back and take out that high. It's almost the exact same situation on the NASDAQ. And as you can see, we're probably not in the squeeze yet, but we might look back on this tomorrow and say, okay, the squeeze was coming on Friday, potentially right into Monday as well. So we're definitely not squeezing yet, but we've got to be prepared for really two basic situations, all right? One is, if this is anything like we've seen the last few months, it will just squeeze and snap right back up to retest the high, right? That's one scenario. Now, this may seem like a really easy scenario to trade, but if you have any experience, you know that a big sharp short squeeze is not that easy. It's easier said than done. So we're going to talk about how to make the safest, the consistent money on trading a short squeeze. That's one of the scenarios we're going to go dive deeper into here tonight. The second scenario, which is the one that's a little bit more of a curveball, is, remember, this move down was pretty bearish, right? It's pretty bearish going lower. What do you think is waiting above these swings right now? Yeah, it could easily be another round of sellers. So we have to anticipate that, although we'd love to get that squeeze ripping back to the highs here, we have to be realistic and anticipate that because we haven't seen the squeeze yet, the bears may come in and they may try to eat our lunch. So we can't get too aggressive on this going higher. Not to worry though, this will likely end up being a bear trap. We do want to make sure we're ready for that situation as well. All right, so those two scenarios are going to be kind of our main fundamental vision for the day here for tomorrow. Now that you know the bigger picture and the overall look to it, let's go back to the S&P now. Or back to our tick chart, the main trading chart that we'll use in our trade room. Knowing that scenario, I mentioned earlier that there's a key difference between the S&P and the NASDAQ, right? The S&P is kind of a lazy bull trend right now. The NASDAQ is a very strong bull trend. Now, what that means to me is there are three basic scenarios now I want to be ready for here for tomorrow. Obviously, we'll be ready for that squeeze, right? We'll talk about how to buy this thing as it rips higher, if it ends up ripping higher. Easier said than done. Now, eventually what happens though is once we get too high up, we don't want to buy too high up there and we start looking for pullbacks, right? That's a second scenario we want to look for, right? So buying it up on the squeeze and then having the discipline to wait for that pullback and getting a nice, good, clean entry on that pullback. Those pullbacks are oftentimes the most lucrative entries you can find for tomorrow. Those are two of the three scenarios. The third scenario is if we get none of that and we get another shot going lower here, I'd love to be a buyer right off of this low. It's pretty much all buy-side trades right now so far. Now, how would I short this? We are going to talk about later on today, there are two scenarios, one in particular that you can definitely look for a short. But I'll tell you right now, when a market has all of this open space to run back to the high, you better be really, really careful trying to pick a short right now. All right, this one scenario that stands out, and we'll talk about that one scenario that's the safest bet for shorts as we go deeper into the video. All right, so now 3 scenarios here. Let's talk about the first one. Lazy bull trend. If we end up pulling back here right now, we have to assume that buyers are going to be trying to buy low, buy low, buy low. What's happened every time we've gone below the moving average so far today? Every time we go below 21 moving average, this is one of the greatest ways to use the 21 EMA. In a bull market, we get below the moving average and we trap the bears in, buy into stops. We go below the moving average, we trap the bears in, and we buy into stops. Now look closer at this. Look closer at this. We pull back, we trap the bears in. This is a failure pattern. Like you guys are learning in our free trading course, failures into pullbacks, right? Failures into pullbacks. You guys are learning these right now in the free trading course. Failure pattern, pullback, failure into pullback. Okay, so one of the scenarios, because this S&P is a little bit more of a lazy trend right now, is if we don't get that rip going higher, and we'll talk about that in a moment, don't you worry. But if all we get is that relatively deep pullback, okay, shot going lower. Again, we have to anticipate this because we're not quite squeezing just yet. This is where we get below the moving average. We trap those bears in, right? Let them get short, let them get short, let them get short. And then like we talk about in the free trading course, we're going to go out, we're going to use their stops as fuel to fuel that run going higher. If we're really lucky, we'll get one of these failure into pullback combinations, right? Now, we talk a lot about these in the free trading course. I know a lot of you guys have already taken that free class and learned all these entry tactics, but if you're one of the few folks watching right now who have not taken that short video series yet to learn my favorite entry setups, I'll put a link up there for you in the upper right-hand corner. I'll be talking a lot about entry tactics tonight, so I want you guys to learn these setups. Grab that link and take that free trading course because the strategy I teach will show you a simple trick to know exactly where the best winning trades will be each day, and you'll learn 4 of my favorite entry patterns to help kickstart you making money on your own. If you're tired of missing the best trades right now, definitely grab that link, take that free trading class, and in that free video series, you'll learn all about how to use the 21 moving average, how to trap these bears in, right, and use their stops as fuel. And one more variation as well. I would love to get that failure into pullback, right? That failure into pullback. Sometimes all we get though is it rips and run higher. If it rips and run higher, this is where we look for traps. Okay, you guys know traps, right? Traps are one of my favorite entry patterns. So keep in mind on that, right? If we do end up shooting lower here, if we don't get that squeeze, and again, I'm talking about that squeeze here next, so don't you worry. But remember, we don't want to make predictions. We want to game plan different scenarios. That way you have a roadmap to make money no matter what happens the following day. So failure, if it then jumps up and squeezes higher, grab that trap. Right? Grab that trap. Another variation of this, if it was to get crushed and run back down, if it really rips and goes lower, this is where one of those 2 try failures will come in handy. All right. So if it really shoots lower, oftentimes these ranges like this, they'll pull back and bounce off those ranges. If you were with me to trade them today, you know exactly what I'm talking about, right? So if it does roll lower here, trap those bears in twice, because in this case, it's a strong move down, use their stops as fuel. And then oftentimes these guys, they'll pop up like this, grab a channel off that high, off that low, mark up that swing, and grab that first test off the low, right? Plenty of ways to trade this. Again, we're pretty bullish overall right now. So again, if it really shoots lower, bear trap, right? Below the moving average, 2 tries, and then grab that first test off of that channel. All right, now let's talk about if we go higher here. Let's talk about if we go higher here. the most important thing that you want to think about is this dance that we kind of use in our trade room. As we're going higher, okay, we're looking for trap patterns. And the reason why you want traps going higher is because you don't want to buy high, all right? Now, again, if this market behaves anything like we've seen the last few months, this thing will rip and run higher. I don't know if it will or not, right? We're not that far down the road yet. So if we do end up punching, remember how traps work. Okay, remember how traps work. Traps are what? Strong run, a shallow pullback to the moving average, a higher high in price. That's the key, the higher high. And then what do we always say? Traps, baby, right? You want to get that nice strong signal candle closing above the moving average. You guys learned this in the free trading course. All right. So as we're going higher here, if this thing starts to squeeze, okay, we then start looking for those bear traps. Why? Because you want to buy as low as possible. This is the way you get in on those parabolic moves, right? Those squeeze moves that go higher. Now, the next step is as we go higher here, right, these bear traps going higher here, now we begin to be too high up, right? Now we're ultimately now getting too high to buy. So the next thing we want to do now is, as we're grabbing those traps on the way higher, and we start to make that run going higher, right? Now we think, okay, let's not chase this thing now. Let's not buy high right now. Now let's look for a deeper pullback. Okay, and keep in mind, this will also apply to the NASDAQ as well. Now, here's what I do in this case. I had that channel drawn up earlier, right, like that. In these situations, we'll go out and we'll start finding larger channels, right? Larger channels, bigger channels by drawing off the high. Okay, remember, when it comes to bull markets, you want to learn to draw channels off the highs. Okay, once you get those channels drawn off the highs, pin it down off that low, and then what? Wait for the pullback. Okay? Wait for the pullback. Now, what we're going to do is anytime we see a strong move like this, remember, anytime we see a strong move, we're anticipating a pullback and a retest of that high. The money is made right here. Now, I know what you're thinking right now. Wait a second. If we're anticipating a pullback, can I short this thing? Not quite yet. All right, not quite yet. Now, why do I say that? Well, because nobody knows how far this thing will go. If we act anything like we've seen the last few months, this thing will just keep on going. All right, so please don't be naive. Okay, the markets don't behave on our terms. I would love to have some crystal ball, right, where I can short this squeeze. But remember, guys, we have so much open space right now. It's very dangerous to try to pick a top on that until we see. Well, I'm going to talk about the one scenario later on in the video tonight. We'll talk about the one scenario that you really want to wait for if you want to short this thing, all right? So you want to go up and then start looking for, right, those larger channels. And again, if you want my opinion, I would say don't try to pick that top. Wait for that pullback and look for the entry off that new channel. All right, guys? Let's go take a look at this now on the NASDAQ. Okay, because the NASDAQ is really a little more aggressive right now than the S&P. Okay, let's grab the NASDAQ here next. Over on the NQ, the 60-minute chart on the NQ, a heck of a lot more squeezy, right, than the S&P is right now. So again, NASDAQ has that strong run up. We're trying to retest that high. It's pretty much the exact same scenario as the S&P, except for the fact it's a heck of a lot more, right, more bullish right now, right? Where we would have expected more bears to be, they've already come in and they appear to be getting smoked right now. All right, so let's go back to the NASDAQ tick chart now and let's talk about this. Okay, if we continue going higher, the NASDAQ has plenty of space here going higher. If we continue going higher here right now and we begin to squeeze, the best entry is going to be that bear trap, right? That trap below that low. Once we start getting way up in the nosebleed seats, we start avoiding buying up here and we start thinking about where can I find a larger channel. Right now, I simply draw the channel that we have on our chart right now. If we keep going higher, I will continue to adjust that channel, drawing off the highs, bring it down to that low, and then looking for that pullback. Okay, remember, anytime we see a strong move like this, we're anticipating what? A pullback and a retest. This is where one of those failure into pullback combinations are going to be the best recipe for making money here. So as we go lower here, we pull back below that moving average, right? Remember, every time we see a strong move up, we get below the moving average, trap those bears in, right? Get them trapped in. Remember, it's difficult to pick bottoms, right? I don't know how far this thing will pull back. It may pull back here. It may pull back way here, right? I don't know. Nobody does, right? How far this thing will pull back. So rather than trying to pick the bottom on this, I would much rather wait for it to get below the 21 EMA. Let the bears show me they're committed. Let them show me they're trying to get short. And once we see those bears get in, once they're committed, once they've dug their own grave, now they can go in and punch it right back up to retest the high. Okay, this is the dance you want to learn. So if we start to squeeze going higher here, right, it's bear trap. It's bear trap. But once we start getting way, way high up, time out, no more buying. Now wait for that correction. Okay, and again, rather than trying to pick that bottom, just simply wait for those bears to get trapped in and then use their stops as fuel for one of those failure and possibly a failure into pullback combination, just like you guys are learning in that video series I mentioned earlier, right? We see a lot of these where it pops up, failure, right? Pullback, okay? Obviously in a faster time frame, there's a lot more, right, movement to capitalize on, all right? So that's the idea now. Now, let's talk about how to short it now. Okay, now that we know more about how to buy the pullback, let's talk now about how to short this thing. Okay, so again, we're going up. We're looking for traps. We are not trying to pick that top. Okay, it's not a very reliable trade. It's an easy way to give back all the gains that you made this week. It could easily keep on squeezing. Okay, go back and look at the last few squeezes. You'll see what I'm talking about. Okay, we wait for that pullback now. We adjust our channels, right? We get underneath the moving average. We trap those bears in. And now we go back where? Now we go back to retest the high. Now we have an edge. Okay, now we have an opportunity now to short this thing. Okay, now here's the problem. We are very bullish. Okay, and again, this goes for the S&P too. Same exact scenario. You can literally take this and apply it right to the S&P and the SPY as well. Okay? So again, we're buying traps, we're buying failures. We're taking profit up around the highs. Okay? Can we all agree the smart money is getting in down here, right? And the smart money is taking their profit up around the high. Okay? Is this a good place to be buying right there? Good place to buy? No, right? Why? We buy low, we don't buy high. We buy at support, we don't buy at resistance. Now, hopefully, there are some rookies out there that are not watching my video right now, those poor traders, right? And they're going to buy into that high, okay? Now, in order for us to call a top on this, in order for us to short off the high, we need three things. One, a major turning point, like a double top, right? Up into overhead resistance. The second thing is we need signs of exhaustion. Okay, we can't just guess and pick that top, not if you want to make money consistently. Okay, signs of exhaustion. In my free trading course and throughout my trade each day, we talk about what's called the 2-try rule. Okay, so we'll see signs of exhaustion. Let these buyers come in and try a couple times. All right. Once they try a couple times, now we have the third component of picking that top, and that is we need some sort of catalyst. And the world's greatest catalyst, for traders at least, right, is stops, right? Using stops as fuel. Think about where their stops are, right, for that short going back down again. Now, disclaimer, warning, these are counter trend trades with plenty of space to run. Whenever I'm talking about a counter trend trade, you should assume these are half-size positions. These are quarter-size positions. In my trade room, we're always saying, go big on your best setups, okay? Go big on your best setups. This does not fall into that category. I like this trade short, But again, it needs to be a quarter size, a half size. It needs to be the size that if you lose it, it's not going to give back a big chunk of the better trades you've taken this week. All right? So make sure you're aware of that. When we're going with the overall trend, we're buying low, we're buying bear traps below moving averages. Those are right. Those are full size positions in my opinion. Right? You can do whatever you want. Right? When we go against a trend, they're counter trend trades. They're less likely. And the good news is, if you can catch a good one, you're not going to need a huge position. Right? So go small, protect your capital, go big on your best trades. Now, at this point, we've got our major turning point, our signs of exhaustion, okay? And we're now going to get that catalyst with those stops, okay? The best possible entry on this, and we talked about this last night quite a bit, is called a bull trap or a crown reversal off the high. Okay, there are two ways to enter this. One is to enter, my favorite way to do it, is to enter with a bull trap right above that high. Okay, these are lower lows in price, and that is a higher high, right? It's basically a bull trap above that high. We call these crown reversals. Again, this is not a bear market, so pick your spots wisely. The second way to do this, the less desirable way, is to sell into stops right below that low. Okay, now remember, in these situations, the target on this is you want to go back to retest that low. Okay, it's a pretty simple trade here. Pretty simple trade, right? We run up, we look to buy the pullback, we retest the high, the buyers get trapped in, and we look for those two tries, right, for that short back down again. Okay? I always say in my trade room, look for that first target, back down to retest the high. You can leave some runners as you go, but the real objective here, though, is going to be to retest that low. Now, once we take out that low, keep an eye out for one big range forming. Okay, we love ranges, right? They act like magnets. So if we end up tumbling back down to this low right now, right, taking our profit off at that low now, what do you think? It's an overall bull market into a trading range. If we're bullish into a range, we find levels of support. And what do? We get below the moving average. We let the bears get trapped in. Bingo. And we buy right back up to retest the highs. Okay? This dance, right? This little dance right here, right? The bear traps on the way higher, right? It squeezes, runs higher, bear traps, so you're buying as low as you can. Don't try to pick that top, at least not in my opinion, right? Because again, these can keep on going a lot longer than you think they can. Find that larger channel, right? That larger channel, get below the moving average, trap the bears in, failure pattern, right? Failure pattern, back up to retest the high. Okay, we take profit back at the highs. If you're smart, though, you won't take your full position off. You'll leave the runner, right? Because again, tomorrow is a Friday, right? So to leave that runner, right? But the majority of the position comes off at that high, and then all of a sudden, we get that crown reversal, right? Horrible place to be buying. The buyers try a couple times. Again, the best entry is that little bull trap. You guys will see a lot of examples of these in the free trading course, right? The next best entry is to sell into stops below that low. Again, the bulk of the position comes off at that next low here, right? Then we start looking for a big range forming. Okay, ranges love to form after big moves, and if it's a range, we then trap those bears in, let them try a couple times, and look for that rotation right back up to retest that high. All right, guys, this is the dance you want to learn here for tomorrow. All right, guys, so now we got a pretty good game plan both on the Nasdaq and the S&P. I'm sure I missed something, right? I'm sure the markets will throw some curveball at us tomorrow, but that's, of course, why we have a trade room. And speaking of our trade room, don't forget, every morning, 8 o'clock Eastern time, we'll get together, we'll trade this stuff together. I'll put all the membership links down in the description of the video tonight. I'll put the free class links. That's definitely the best place to get started. So grab those links in the description, take the free trading course, learn all these entry tactics. That'll get you ready and primed up and ready to go for trading with us in our Trade with Members, 8 o'clock Eastern Time every morning. Don't forget, if you have questions, if you need help along the way, the easiest way to get help is to call the office or use live chat. We're always here to help out. If you need help, don't be a stranger. We're here to help if you need us. In the meantime, though, hope you learned a bunch here tonight. Hope you use this knowledge and this game plan to make a bunch tomorrow. Have a fantastic, fantastic day tomorrow. We'll come back next week and finish up the entire month of June. This month has just flown right by. Guys, thanks for watching. Be well. Be nice to each other out there. And be here next time. Adios, amigos. Bye-bye for now.